Welcome back to AM Northwest. As you get close to retirement, being too heavily invested in the stock market could really be an issue. Here to tell us more, we welcome back financial planning and consulting specialist, David Swanson. Good to see you again, David. So explain what I mean by that.
So what happens is that as you approach retirement, sometimes you don't adjust your investments to reduce your risk exposure. The problem with having too much money in the stock market is that if you are not working, you don't really have the income to make up for
losses,
dips in the
right?
market, for losses. And this is all that you have. And when we do financial planning for people, when you retire, that pool of resources has to last you for the rest of your life. So taking too much risk with too much of those assets could cause a real disaster for you down the road.
Initially, after the election, we saw an upsurge, like things were going really well. And what are you seeing now?
Well, we're really, if everything moves along as it's perfectly balanced as it is, we're probably going to be okay. But these are some real triggers that are out there. Number one is that this political uncertainty and this fight between both sides of the aisle on what's our future of our country is going to be. If we had an impeachment of the president, if we had this Russian probe thing that came that caused more uncertainty into the marketplace, and the biggest of all of these is this tariff war that we're having right now. You know, every single year, about $500 billion worth of goods and services float over from China that we consume. Those ships go back, almost all of them empty, because we export about $130 billion worth. So this trade war is really, really affecting China much more than it is us. And the Chinese market this year is already down about 20%. Now, if we had a 20% decline in our market, people would be really in turmoil. It'd be really difficult for retirees. We're up about 3% so far this year. So either it's coming, or either it's coming that this wave is going to affect globally, or we're going to be just kind of mull through this. But it looks like we're actually accelerating the trade war, not reducing it. And tariffs never seem to work.
And so does that mean like you could possibly see a stock market collapse like we did in 2008?
That would be the one element of the perfect storm that would allow that to happen. Because if we start pricing goods and services at higher levels, then you and I, the consumer, have to pay more for those goods and services, or we simply don't have them.
Right.
And at some point, we run out of what we can earn in salary for what we have to pay for goods and services. So this is hurting farmers, it's hurting steel producers, it's hurting the core part of this country right now because it's an adjustment. And it doesn't look like it's going to change. So either China is going to have to give up on some of their rules and regs that they've had that's been hurting this country for so long, or we're going to need to stop this trade war. But I don't really see that happening.
So then what can we do? Because we can't control that. So what can we do?
What we can do is recognize how much exposure you want to have your life savings in this area. So if you are very concerned and you're younger, it's not such a big deal because the market will rally through and you'll continue to work. And if your accounts go down, just like in 2008, we worked through it, everything was fine. Now, 10 years later, if you're retiring in 2018 and we have a market decline, what's going to happen if 30 or 40% of your assets are just simply not there? Are you not going to be able to be as comfortable in retirement? So what we say is, have a plan, do an inventory of all of your assets, make your plan in writing, because if it's not in writing, it's not really a plan, it's just a concept.
Right.
And then have somebody help you implement that and manage that going forward. And that's really what we do.
Okay. Well, I know that you're going to hang out with us for a little bit because we've got some retirement questions to answer. So, David will be back with your retirement planning questions right after this. Don't go away. Thanks so much for watching AM Northwest. David Swanson from Swanson Financial is back to answer your retirement planning questions. So here we go. Question number one, my wife and I are about to retire and we have not paid much attention to our retirement savings investments. Can you help us make a plan so we don't run out of money in retirement?
So the single greatest concern that most people have is running out of resources before they retire. And absolutely. And you can only work with what you can work with. To thinking that you're going to double or triple your assets during your retirement is really the wrong concept. So what you have, you make it work. And we can definitely sit down with this couple and give a plan, put a plan in place for them.
Single women especially have kind of a hard time, don't they? Have you seen that?
Well, they end up with resources from a divorce, from a pension, from their federal employer, from employment from their ex-husband, from Social Security issues. They're all unique, and really the vast majority of our clients are single women because men, we burn bright, but we burn out.
Oh, listen to you, burn bright.
we're great through our 50s, and then it just starts going right downhill as I'm moving out of my 50s right now. So.
But we need to live longer.
We need to live
so we need
longer.
more money. I'm very close to retiring. The stock market over the last 10 years has been very good to me. Now I just want income, and I'm concerned about the risk of having all my savings in the stock market. Can you help me?
And a lot of times people, because it's worked, they just keep it the same way. And especially over the last 10 years, it's worked. It really hasn't been, there hasn't been anything you needed to do. And most advisors don't want you to change anything because the fee is all tied to you reinvested in the marketplace. So if you go out of the market into the safer accounts, potentially the fees are going to be reduced, which is why you need to have a fiduciary investment advisor, someone who puts their best interests, make sure that your best interests are before their own and that they disclose all the fees. And it's hard to find a fiduciary advisor, but you really need to have one, and those kind of things won't happen.
I am very concerned about the stock market being so high. My current advisor assures me that I should not be worried, but I am as almost all of my savings is in the stock market. What would you suggest for me?
And here's the dilemma. You have a trusted advisor that you've worked with. They've done a good job for you for a long time, but your sense in your mind is saying, wow, I think something's wrong here, but I don't know what it is, but I think I need to make some changes.
Right.
But nobody wants to make any changes because they want to continue with the same fee structure. So you need to seek a second opinion, and this person needs to have someone look at their assets. And if you've got more than half of your assets in the market and you're retired, you're really headed for trouble, I think.
We've been watching the political process play out, and we're very concerned it is not going to end well for most Americans. We want to be more defensive as we're both just retired. How would you invest our retirement savings given our situation?
See, now this is a great opportunity to sit down and look at everything that you have, your goals and objectives, the things that you want to accomplish in your retirement, the vacations you want to take, the life that you want to live. And then you match that against the resources that you have available, and you write a clearly defined plan that allocates those resources over the beautiful and wonderful things that you want to do to live your life, so you can live your life and not worry about running out of capital.
Lastly, these trade wars can only end badly. What do you think the average retiree should do to protect their savings from this pending train wreck we are heading towards?
I think it is a train wreck. I think we're 80 miles an hour going on a 30-mile turn, and it's going to happen, and it can't stop. It continues to escalate because as soon as you put tariffs on 30 billion, then they put tariffs on other things, then you put on 50 billion, and pretty soon the cost of everything is going to go up until somebody blinks. If you are in the market, you need to seriously consider the proper proportion of assets that you should have at risk, because we could be headed for a substantial decline in the market going forward. Okay,
we want to tell folks if they'd like to find out more, be sure to contact Swanson Financial. You can just give them a call, set up an appointment, go see them. 503-603-9900. And of course, we'll put all that information for you, as well as this segment right here on KATU.com. David, thank you very much. Appreciate it.